Well, quite a drop we've seen in Kenya's foreign participation yesterday, and with that we saw the NSE 20 index fall back. The broker I was chatting to saying that we still face a very lowly informed local retail investor market. So with that being the case, how much of this rally on the NSE is dependent on foreign investor participation?
Well, thank you very much, Alicia. I'm really glad to be here. Thank you very much also for that observation about our market. Well, looking at how our market has been performing, especially over the recent years, we've been seeing a lot of support, especially from foreign investors who are able to see a lot of value in some of these stocks and are able also to take a long-term perspective of the market, which is very different from the retail investor front. And that is what basically as stockbrokers we are doing our best to educate our investors and help them to see the value in some of these stocks and be able to take advantage of that. As you observed, we are seeing a bit of a lull in terms of the investment participation, foreign investor participation in our market. I guess it could be more of a preparation and also looking at the foreign exchange behavior, especially towards the close of the year, of the month, sorry.
Well, the participation of foreign investors certainly driving some of the sentiment, but news does as well. We heard that Telkom Kenya has had 1.2 million mobile subscribers and 250,000 CDMA subscribers by the end of 2009. That falling way short of what it had expected to achieve by the end of last year. How's the market reading that news by way of implication for Safaricom?
Well, definitely that's a very interesting observation, especially maybe observing the fact that last year was not a very favorable year, especially in some of these sectors which are not as core like food or such. So definitely that's going to be a bit of a concern for some of the other stocks like Safaricom, as well as some of the ICT related stocks like Access Kenya, for whom we are seeing right now the PE is above 20, which is a bit of almost looking a bit of a price because of the way most people look at the ICT stocks as though their future is more promising. And definitely with such projections, there'll be a bit of a concern as to how those shares are going to perform, and especially for Safaricom, whose year end is just in a few months' time.
Still, we've got these firms aggressively spending. I mean, Telkom Kenya, one of it saying that it's spending between 10 and 16 billion shillings developing its network in 2010. We've just seen Safaricom as well, go into the bond market to raise capital to finance its expansion plans. I mean, what kind of competition do you see Safaricom facing in that current context?
Well, one good observation definitely about Safaricom in particular is that it has really been enjoying the lion's share of the market, especially over the last few years. Basically, because of the entry level that Safaricom had, it has been able to really entrench itself and develop a lot of loyalty, especially looking at this mobile banking product, M-Pesa. And definitely because of that, it's what we seem to be seeing of Safaricom is that it's trying its best to ensure that it guards its market share. And because of that, definitely is going to be spending a lot, and that's going to be a bit of a concern, especially in terms of their bottom line. But definitely with the mobile penetration still a bit low, looking at in terms of the adult population that we have in Kenya, definitely Safaricom will be able to still tap a lot of that because the regional network is fairly good, and of course that gives them a good platform. But when you look at Telkom Kenya and how its projections are not doing as well, definitely for Safaricom that's something they might need to look at, especially in terms of balancing how they expand and how they ensure that their bottom line is not negatively affected.
Well, certainly adding to Safaricom's coup is the fact that we've had the regulator, the Communications Commission, saying that it will not drop that $25 million 3G license fee for other operators in the region as well. So that's another positive. In the meantime, we've had oil retailer Kenyan saying its performance in the second half of last year has been much stronger than its disappointing first half. The market seemed to like that news. The share price up 4.5% yesterday, Samuel.
There's excellent observation there, Alicia. Actually, today as I was leaving the trading, Kenyan was up to 61 and there was actually no supply in the market. Basically, those news have been absorbed by the market very, very positively. Well, the fundamentals for Kenyan have been very positive and good. Definitely, the profit warning caused a bit of a panic, and you saw a lot of selling and panic selling. And though investors have still been developing a lot of interest in that share, basically because of their dividend policy as well as their aggressive expansion plan. And so it seems like all the tables have turned in their favor, and definitely for any investor who had gotten in below 50 shillings, this is a good time for them to be smiling back.
On what basis is that? I mean, what's your outlook for the company moving forward? Because as you say, we know that they have expanded aggressively. They've got operations in Burundi, Ethiopia, Kenya, Rwanda, Tanzania, Uganda, Zambia as well. So what's your outlook for that company moving forward?
Well, the strategy for the company is almost a bit commendable, mainly because looking at how the global recession has affected some of the other developed economies, the regional markets in Kenya as well as the other sectors of the region definitely have been relatively promising, with a lot of construction going on in some of these countries which had previously had some bit of political instability, like Rwanda. So definitely when we see them tapping into some of these markets and being able to position themselves, definitely is relatively positive, though it's more of a long-term approach for them. And mainly, I guess the strategy will be to see how they're going to be able to still balance in terms of not again expanding too much and affecting their bottom line. Also, the favorable court ruling about the pipeline company definitely has also helped them, because it's going to enable them to be a bit more efficient in terms of their delivery of their services.
We also heard recent reports of multinational players exiting the Kenyan market. I mean, what impact do you see that having on the overall playing field?
Well, very good observation there. We have seen Caltex and some of these other companies exiting our market. Mainly is because of the strategy that some of these people are approaching, especially in terms of how they manage it and in terms of their parent companies. But in Kenya and as well as the African region, if some of this management can be able to sit here and approach and understand how our markets behave, they'll be able to position themselves in a very good way to benefit. Though I guess the efficiency of our systems is a bit of a concern, the cost of production a bit of a concern, and once we see a lot of change, especially stability in some of these segments, they'll be able to still perform. But it's still an opportunity for Kenol, because it being a mostly Kenyan company is going to position itself very well.